Stocks started the day with small gains, but most of the day they went down. By the end of the day, major indexes were all in the red, which means they had all lost money. With only 2 more trading days left in 2022, Wall Street continued to be cautious on Wednesday. All of the major averages went down by more than 1%, and energy stocks led the way. All 11 of the S&P 500 sectors lost ground, and the index as a whole fell 1.2%. Only 25 of its people did better. The Dow Jones Industrial Average fell 1.1%, and the Nasdaq Composite fell 1.4%. Dow Jones Market Data says that the tech-heavy index is down more than 10% this month and is on track to have its worst December ever. A year-end stock rally couldn't happen because bond yields are still going up. Today, the yield on a 10-year U.S. Treasury note went up to 3.89%, which is the highest it has been since November 9. The yield on the 2-year bond, US 2Y, went down by about 1 basis point to 4.36%. That is bad news for stocks any time of year, but especially during the week before Christmas. There isn't much else to talk about each day in terms of news, and there aren't many trades. Today, less than 3.1 billion shares changed hands on the New York Stock Exchange, compared to the average of more than 4.6 billion shares per day so far this year. Low trading volume can make daily moves bigger because there aren't as many traders at their desks to stop the trend. With a 2.2% drop, the energy sector was the biggest loser in the S&P 500 today. This was because oil prices fell again. In recent weeks, the short-term bull case for oil prices has been linked to China's decision to loosen restrictions on COVID-19. When the world's second-largest economy reopens, more oil and gas should be needed as people get back to work and factories start up again. But it was clear that when restrictions were lifted, the number of COVID-19 cases would go up. The US and a few other countries said today that they will only let people from China into their countries if they have a negative COVID-19 test. People aren't as excited about China's reopening and how it will help consumer demand and supply chains in the short term because the process isn't going smoothly. After making a 3.9% gain on Tuesday, the iShares MSCI China ETF lost 3% today. In terms of the economy, the market took in a new set of housing data. In November, sales of homes under contract fell again, this time by 4%. This drop was bigger than expected and came after a drop of 4.6% in October. In another piece of economic news, State Street's Investor Confidence Index fell from 90.3 in November to 75.9 in December. Even though most stocks went down, Tesla, TSLA, was one of the few that managed to end the day higher. This ended a losing streak of 7 sessions for Elon Musk's EV company, which also hit a new 52-week low early in the session. Cathie Wood was an investor who looked for deals in TSLA. Long-term Treasury bond yields kept going up, which made technology stocks especially weak in a day that was mostly red. Apple, AAPL, is a general market indicator, and a drop below its lows in June is a bad sign for broader indexes. In a strange turn of events, the energy sector also took a big hit today. This is likely due to China's slow reopening. For investors who want to put their money to work right now, Treasury bills offer 4.7% returns with no risk. Since the end of November, the S&P 500 has lost more than 7%. But this wouldn't be the worst month of the year by a long shot. In September, the S&P 500 fell by more than 9%, and in both June and April, it fell by more than 8%. Investors have been worried about the Federal Reserve's hawkish projections and the possibility that the central bank might have to keep raising interest rates even though the economy is slowing. This has caused stocks to go down in December. This trend has continued into the last week of the year, which is likely to be characterized by low volume and few catalysts. Generac Holdings is the best stock, up 5.6%, and EQT is the worst, down 7.8%. The best sector is financials, down 0.4%, and the worst is energy, down 2.2%. Thank you for watching.